jump into the next segment we have coming up. Mohammed will be moderating this segment for us. With Mohammed, we have a good friend of mine, Dino, Chief Product Officer, also Head of Engineering for Caliber. We've got Amy, it does say Emily here. We have Amy, who is the president of First American DocuTech, and Joyce Pepper. Joyce is from CoreLogic, one of their senior most engineers there, on a little bit more of the technical product management side, but this is our next segment up. Luckily, I believe all of these people reside in Southern California, but I technically only know that about 2 out of the 3. I could be wrong on the 3rd. With all that being said, Mohammed, if we can have you come up and introduce a little bit more, that'll be great.
Absolutely. Thank you, Brad. And not many people get to say this, but we are following a drone technology session, right? But it is apropos. It is a latest technology embracement by lenders and fintechs. So as we give Dino, Amy, and Joyce to come on video, I will request them to come on video. And we have some of the luminaries and heavy hitters in the mortgage industry represented today in this panel to talk about how lenders and fintechs are embracing the latest technology and digital transformation paradigms. So with that, I would like each one of them to introduce themselves. So let's start with Dino. Dino, would you please introduce yourself, talk a little bit about your role in the firm, what you guys are doing last year, this year. Thank you. Take it away.
You bet. Thanks a lot, Mohammed. Can you guys hear me okay?
Yep.
Sweet. All right, let's get to it. Last time you guys noticed I moved out of my garage, so there's that. So it's still COVID, from home, but so it's exciting for me. Yeah, I'm the Chief Product Officer for Caliber Home Loans, primarily based out of Dallas, national lender, top 10 lender, et cetera, working in all the channels. I also have the pleasure to be able to really coordinate a lot of our software engineering stack, and very excited to be here today, Mohammed.
Thank you, Dino. Appreciate it. And unfortunately, Emily couldn't join us from First American DocuTech. However, we have Amy Brandt, who's the president of First American DocuTech. Amy, take it away.
Thank you. Shabby seconds for Emily today, but happy to be on the panel with Joyce and Dino. I'm Amy Brandt. I'm president of DocuTech, which is now part of the First American family.
Thank you, Amy. And last but not least, Joyce, how are you? She is leading the technical product management and software engineering at CoreLogic. Amy, take it away.
Yes. Hi, thanks, Mohammed. Happy to be here. I am Joyce Pepper, and I oversee all of the Gen 2 B2B delivery within CoreLogic. So packaged products, data, bulk delivery, all rolling up to me.
Thank you so much, Joyce. So we have a great slice, a great representation from the industry, a top lender in the form of Caliber Home Loans, a consumer of data and technology, as well as an innovator in their own right. We also have 2 of the largest data and technology providers to the industry in the form of First American DocuTech and CoreLogic. I think we have an interesting setup and a panel and a discussion. Full transparency, we actually work with all of them. So thank you for being a customer of ours, and it's great to work with all of you. So with that, let me set a little bit of a context here. One context I will take from what Alex mentioned from MRC, and that's the fact that we just came out of one of the steepest recession last year, 2020, and we're looking forward to one of the strongest recovery in 2021. It is definitely an inflection point, a transition period. 2020, as the earth got hit by a black swan, 2020 for the mortgage industry was a bumper crop period. We did a record origination volume in 2020, $3.8 trillion. Of that, 2.4 represented in refis, 1.4 represented in purchases. The profitability it's incredible. Net production profit was in Q3 of last year was above 200 bips. It came down a little bit in Q4 to 137, but we're potentially looking at margin compression, but it's an interesting year that we're coming out of. In 2021, we're looking at a little bit of a volume reduction in the sense that we're looking at predicting 1.6 trillion in refi, 1.7 trillion in purchases, and still that is the highest purchases ever recorded. It is the one of the largest summits that we have gone to. So a definite volume reduction. There is our expenses are still high. The cost to originate is still around the $8,000 mark. Given that background of 2020 and the profitability that was acquired in 2020 and going towards an interesting era in 2021, I'd like to have the panel talk about what kind of technology adoption that they saw, the trends that they saw in 2020, and given the new era that we're entering in 2021, what kind of technology adoptions are you looking forward to in 2021? And given the representation of consumer and supplier here, let's start with Amy. Amy and Joyce, and then we'll talk about the consumers of that data and technology with Dino. Amy?
Thank you, Mohammed. We have a pretty privileged position at DocuTech to be able to see a variety. We have a large client base. We now do over almost 40% of all the mortgage transactions in the US close on our documents. So we see quite a lot of volume coming through from some really wonderful originators. And the joy of that is kind of seeing what they are doing on the technology side. Because docs are so integral to the entire process of originating a mortgage, you end up getting involved in a lot of their different technology implementations. I think what we have seen is not too terribly shocking, right? When volume hits a high watermark, lenders start thinking about the things they were kind of thinking about, but really have to think about, and that is how to increase the amount of automation and efficiency in their processes, because they're stressed with hiring people. And they're worried about hiring up to the current capacity levels because everybody knows it's probably a high water mark and they're going to stream back in volume. So how can we, in essence, do more with the people that we have via automation? And the forms that typically takes is ones that we would all expect. They're looking for ways to maximize the utility of their point of sale tools, and get their customers to do more of the processing work for them by submitting electronically. And if they do that, then that helps with the entire digital throughput, and automation opportunities throughout the entire life cycle are increased if the consumer is putting in their documentation upfront in a point of sale tool, or even better, linking it up directly digitally via, like a Plaid or something like that, where they can import their like income documentation or information directly. So we see a lot of point of sale. We see a lot of being done on top of old LOSs, some LOS changes, but a lot of folks saying we're too busy for a complete LOS swap out. So we're going to layer our LOS with things like robotic process automation. To the extent that that can morph into AI, we'll try to do that. I think that's mostly aspirational on the AI side at this point still, but robotic process automation is fairly straightforward. And then how do we continue to automate pieces like underwriting and some of the specific automation tasks? All of the LOSs have been pretty bad at allowing for workflow management and simultaneous workflow. So we've seen a lot of efforts around how do we kind of find a way to do processing on a variety of tasks within a loan, and automate that task routing. So this is a lot of layering of other kinds of BPMS systems, or like I said, RPA systems on top of existing technologies. So I guess the big picture message is getting more out of what you have, perhaps layering with some new tools, and finding a better way for all those tools to work together in a seamless fashion, because you don't want anything going like kind of dropping in the chasms between your point of sale and your LOS. So that's not too terribly shocking, I don't think. People have been working on that, but the earnestness and the urgency of which those projects are being undertaken seems to have garnered a little more momentum.
Absolutely. Thank you, Amy. And one of the Strathmore results and findings was that people have deployed a lot of technology, but they're not really using it to its full capacity. So Joyce, you want to kind of provide us your perspective on this?
Yes. Yeah. I echo a lot of what Amy was referencing. From my perspective, because I do really focus on the B2B interaction, it really was about how mature and flexible your APIs were. And so, right, rather than just delivering back this big bucket of data, what can I do with that data? So whether it's income analysis that brings me some rich insights, or it's, data hydration, use cases. They wanted to do more than just get the data back, because the notion was, I need to get up to speed, I need to integrate quickly, and I want to have a wider breadth of providers. We did see quite a bit of an uptick in terms of servicing, of course. We wanted to get those integrations stood up quickly. Clients coming in and trying to get to data, even if it meant that they wanted to break some of their patterns. So we had some clients coming to us, they didn't have time to do full integration. So what were some of the hybrid approaches that we could take so they could respond to the industry quickly? So it really was about, how can you support me to get out the door quickly? And I think what we're seeing is, when they are ingesting data, they do want to do more. I think AI, I agree, I think we're a little bit early in the AI front, but I do think that it's coming, and there's a mindset around that. So the data matters. So they're mapping out with that in mind. What can I do to get these insights and build upon them?
Thank you, Joyce. Finally, one of the consumer of technology and data, at least from that perspective, and an innovator in themselves. Dino, would you like to provide a perspective on this?
Yeah, to say we're at a special time is an understatement, right? Unprecedented was overused last year, so we stopped using that. But I think I agree once again. Also, what the two smart individuals that just talked, Joyce and Amy and such, and they're good friends as well. But first things first, we all moved home over a weekend. At Caliber we did, and what became truly imperative was, how do we keep communicating effectively internally, and then just as fast, how do we make sure that we are communicating effectively with our external partners and customers? And so that was a challenge, but we literally did it in a week, really a weekend. So that was a magnificent feat, and so we have a great infrastructure team that did that and enabled it. Some of the rest of it, though, is about everybody who's smart today is focused on, I think, building what we refer to as a scalable mortgage machine. So if you can take the unnecessary human element out of things and automate it, and the other thing to think about is, there's no single mechanism. Those that think singularly and not in parallel to sort of a rainbow effect, a spectrum of possibilities for customer engagement, if you don't think that way, you're doing it wrong. So that's where, at Caliber, what we've definitely been implemented and interested in is, we're picking the best of breed solutions as we see them, even though they're moving targets, and taking from off the shelf to create much more automation and scalability. So we focus less on the same traditional humans, but really to bifurcate some of the roles and taskification of things. So think about an automated track first. How fast can you go, right? Can you get the loan so it's sitting on a shelf in a few days and just waiting for it to click through the regulatory day cycle, right? So that's a lot of what we've been focused on. Like everyone that's smart, you have a series of projects going on, and you're in your various evolutions of that. But we're really excited at Caliber to be where we're at in the industry, and to see where we're heading, north of that as well.
Thank you, Dino. So I think one of the things that we have seen in the industry, that there are a lot of lenders who have finally, right, in 2020, after hiring oodles and oodles of processors and underwriters, very, very expensive underwriters, taking a look at the human in the loop and tackling that problem head on, after having focused a lot of attention on the front end, application intake process. They're finally kind of shifting towards that. 2020 was definitely a definite shift towards that automation and scale, and that scalable machine, as you mentioned, Dino, tying into specific point technologies. I think, Joyce, you mentioned API and the API store and digital gateway, and how to basically take that and inject it into the operational pipeline, and as well as the offerings that, Amy, you guys bring to the table. I do want to there was one interesting technology that did take off like a rocket, quote unquote, in the industry. That was e-closing, right? The states jumped onto it. And Amy, you guys are a premier provider of that. Would you want to talk a little bit about that perspective? How did you see the ramp up, or were there folks lining up? What happened here?
Yeah, and let it be
Oh.
a cautionary tale for future. I mean, we had spent, most of 2019 trying to convince people you've got to do e-close. And you get various responses. Some people are like, yeah, we got to do e-close. And then you get some people going, we're not going to be first. And we got other things to do. And then suddenly, immediately in the aftermath of the lockdown, people are like, we have to do e-close and we have to do RON, because I think everyone here knows that there's varieties of e-close. There's from hybrid all the way to a fully digital remote online notary e-close. So, most people jump in and do hybrid first and then sort of walk towards getting to fully digital. And you immediately have this onslaught of folks going, oh my gosh, we don't know that there's going to be another way to close loans, so we have to get to RON. So we got very, 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 very busy. It was astounding how quickly that happened. And the cautionary tale there is, like, don't be last in line, because of course we came back and to the folks that were already in queue and in process, we're like, you're in queue, you're in process, we'll get you through first. And the other folks, of course, we want to get everybody through, but we had to prioritize. So it was a lot. I think what ended up playing out is, closings continued and it didn't become the absolute imperative to do remote online notaries. And as we did more, we realized there's a lot to it. I mean, and what I mean by that is the devil's in the details between the handshakes between systems. So as you're going from digital documents to the online notary provider back into Vault, there's a whole lot of steps that have to happen there. And those systems have to be very deeply integrated. So we certainly have learned a lot there. We always do, right? I mean, that's the journey of e-close. The more you do, the more weird things happen that you couldn't have imagined happen. And then it happens. And then you have to figure out the solution. So we learned a ton, and we spent a lot of First Americans development dollars investing in continued work in our eClose platform at large and in the RON platform specifically, in those tie-ins. So the adoption ended up pretty high. We did over 500,000 eClose last year, which is a lot. So we're really cranking on them. You are seeing the adoption pick up. It's still mostly hybrid, but I think you're again, sort of the tale of being prepared and automating as much as possible, and then really all underwritten with there's no substitute for experience and getting some done.
Thank you, Amy. Dino, have you guys implemented e-closing? What's your experience having gone, implementing it or having implemented it?
Yeah, I think, like, once again, as Amy reflected, most of the big tier players are in that, that spectrum of being able to how deeply they want to go after it and how they, so it's definitely something that we are working towards, at Caliber. I think anybody at our tier is, and what's always been great about last year, I think for, Amy and I to watch, is we went from a subset of the states having mandated as we walked into last year to mid-year, you had more mandation of suggested actions in various states. So it's now tipped over, it's tipped the scale to, past that 50% threshold. So you have that ability. And for somebody, me personally, I did 2 Caliber loans because I like to, eat my own dog food at Caliber. And I went through, definitely the local notary experience where they came to my house, and we did it in my garage though. So we did the social distancing thing, of course. But it definitely, Caliber echoes Amy's thoughts on that's where it's all going. Once again, back to my remove the friction in the process, make it easy for the consumer. And today, it used to be just about easy. Today, it's about easy and safe, right? So.
Thank you, Dina. All right, we're coming to a close of the panel. So I want to address, given the representation here, I want to address a few specific technology points and kind of your thoughts about its uptake in the industry, where it is, kind of status, just your perspectives on it. And Joyce, I'll start with you, given you are one of the premier providers of machine learning capability, given that, AI, ML, we've seen it in the industry from a kind of an implicitly, they're already there. OCR technologies have a layer of AI and machine learning. AVM technologies have a layer of machine learning and modeling and so forth. So we're already using it, but it's not explicit. It hasn't been an explicit uptake in the industry. Where I'd like your thought on how you see it. Why are lenders, kind of, if resistant to it, why are they resistant to it, and what's stopping that adoption? from taking off?
Yeah, I mean, I think for the last year, really, it was just priority shifted, right? You needed to, your must-have priority shifted dramatically right under your feet. And so you needed to get to e-closing. You needed to get to a way where your business could proceed, even if you could not have real-time interactions. And so I think it's coming. I think from a data provider perspective, from a CoreLogic perspective, certainly it's there, right? Propensity modeling is what we do. Home price index is, it's all about our back end work. It is now getting people and consumers to be comfortable with, yes, this model has proved itself. This is meaningful in the industry, and it helps me get faster, better, stronger in delivering the answer that I need to deliver to my consumer. But that's a process. I think it's an evolution. It's a little bit of a confidence building process, as well as the data continues to come in and we feel better about what we're predicting off of that data. I don't think it's an overnight transition. I do think this is it. This is the long game here, but it is where we are going.
Thank you, Joyce. And I'm going to check if we have any audience questions before we close the session. Thank you, everybody, for your thoughts, great perspectives. Just as a closing remark, there is an audience question around business metrics, drivers, benchmarks that your firms are using to decide what the next large initiatives will be in 2021. From a technology provider as well as a lender perspective, could you address what are the things that you're looking at? What are the factors that are driving your decisioning in developing as well as adopting certain technologies from your respective firms? Joyce, do you want to kick it off for us?
Sure, I'd be happy to. Yeah, I mean, from our perspective, it really is delivering data back in a modular software architecture. So how do I continue to build out? If I consume one product today and I want to consume 2, 3, 4 products tomorrow, how do we, CoreLogic, make that journey easy for a client to do? It should not feel like a brand new integration every time. What can we do to ease their journey there? We know that they want the data. How do I get it to them quickly?
Thank you. Dino, Amy, your thoughts?
Yeah, sure. Our measuring stick or yardstick as far as scalable mortgage machine is the 3 C's, right? It's reducing cycle time, it's reducing cost per loan, and it's increasing capacity. Pure and simple.
Thank you, Dina. Amy, last thoughts?
Yeah, from our side, we're still obviously working on a lot of enhancements around eClose. We're working on the modularization of our product so that folks that are maybe daunted by implementing the holistic solution can start implementing pieces and parts. And then we're working very hard on our integrations, continuing to enhance our integrations with key partners, because we see that as driving additional value add, transcending our own product for our customers.
Thank you, Amy. One last question from the audience. There's a couple of things that are talked about often in the industry. We just listened to a drone presentation, which was very unique. And I'm sure all of us were thinking about use cases within our own, kind of respective areas of the industry. Blockchain gets talked about a lot in the industry as well. Do you guys see any, besides those two, are there other unique specific technologies that you would entertain or ask to be kind of considered, right? And this is an open question for anybody who wants to take it. For those particular, like the up and coming, right? We are still considering AI and ML has not taken off, has not achieved escape velocity. Forget about blockchain and drones, but those are things that are coming into our world. Any thoughts on, the intake, any use cases that you guys have thought about that applies and kind of is applicable to our industry overall?
I'll say a few words on that. So I think the key is orchestration. A lot of people have trouble finding the right vision or destination target, but then eventually they'll all see where the rest of the herd is going, so they'll head there. And then it becomes about execution. But when you're live in production across many platforms, and it's every loan that goes through mortgage today passes through at least 20 companies' systems, right? So because of that, it's all about orchestration. So, and that, some of the challenges that like Joyce might face in trying to push up down, you have super smart analytics that Joyce can can wake up a business to through CoreLogic and such, I'm sure. But the problem is, how do they put that into action? If they put it through humans, that's too slow. So you need to have injection points, and then it depends on the maturity of the systems that you're tethering it to. So, I mean, that's where, doesn't mean that you can have all the smarts in the world, but if it isn't actionable analytics that you can hook directly up to the machines, you know, that's why people are going to have trouble adopting.
Thank you, Dino. Joyce, Amy, any other thoughts?
Yeah, no, I echo that. Absolutely. I think it is the appetite as well, right? So these workflows exist today, and how do we seamlessly interact with them in a way that there's some value there and it doesn't feel like just more is being added to it? In an ideal world, if we're adding more insights, we should be reducing cycle time or increasing capacity. How do we get to that? And really for us, it's about conversations, understanding what's happening with the lender, understanding where there is opportunity for them to shrink down the process that they do today, and what data do they need to be able to do that with confidence.
Absolutely. Thank you, Joyce. Amy, any last thoughts?
Yeah, I think it's going to be an interesting year. We're going to see consolidation, and we've already seen consolidation amongst lenders whenever there's shrinking volume. That tends to happen. I think you're going to see a technology arms race. When you look at a lot of the public filings or comments by companies that have gone public over the last year, a lot of them are centered around their use of technology to improve their competitive edge and to, you know, decrease their costs and improve margins. So you know, I don't think that mortgage was ever thought of as the hotbed of technology, but now suddenly I think it will be a bit of a technology arms race. So I'll be interested to see how that actually ends up playing out in the various parts of our world.
Thank you. Thank you, Amy. And I think one last thought from myself is that when we're looking at the pipeline, we're not just looking at the pipeline at the application intake side or the operational manufacturing pipeline side, but it is an all-encompassing, from the point of thought of buying a home, where a person is searching for a home and drone technology comes in behind the scenes as images and pictures that they're looking at that are helping them decide. And as they flow through the real estate agent to lender handshake, and then from the lender going through an application intake process, a decisioning and underwriting, all the way through to taking to secondary markets and servicing, that is the pipeline that we're attacking. It is not a very small, unique stovepipe situation. It is, when we talk about digital mortgages end to end, we actually are referring to the point of thought of buying a home to the point of thought of getting a key, possibly through a drone coming by and dropping it in our hands, but a key to enter the house and own the home and make the house a home. Thank you, everybody. It's a great panel. I appreciate all of you jumping on and providing your perspectives. Thank you very much. And Brad, back to you, over to you again.
Awesome. Thank you all so much for joining us today. We really appreciate that. That was a really action-packed segment right there. We're going to do one more segment. Then at the end of our next segment in 15 minutes, we'll be giving away our first raffle of the day.